Today, we're diving into a scenario that feels ripped straight from a thriller, but it's a plausible look at our near future, the 2026 oil shock. We're going to break down how a regional conflict could almost overnight spark a full-blown global economic crisis.
Imagine waking up in March of 2026 and seeing this number flash across every news screen: $110 a barrel for oil. A number like that doesn't just whisper, it screams panic throughout the global economy. So how on earth did we get here? Well, it all boils down to two key moments, less than 24 hours apart. It kicks off on February 28th with a coordinated military strike. And then, bam, on March 1st, the retaliation comes. And it's a move aimed right at the world's energy jugular. Okay, so how does a conflict in one part of the world manage to light a fire under the entire global economy? Let's trace how that first spark turned into an inferno. So, the first domino to fall is this major military operation. The official line? It's all about degrading Iran's military capabilities, taking out key leadership and infrastructure with a series of really powerful airstrikes. And Iran's reaction is anything but subtle. They hit back, and they hit back hard. Missile strikes on US bases in the area, that was probably expected. But the real masterstroke, their most powerful countermove, was to completely shut down the Strait of Hormuz. And that right there, that single action, brings us to the absolute heart of this crisis. Because you have to ask, why does this one little sliver of water have such a stranglehold on the entire global economy? The numbers, honestly, are just mind-boggling. We're talking about a quarter of all oil that travels by sea, and about a fifth of all liquefied natural gas passing through this one single choke point. It's the superhighway for the world's energy, and Iran just threw up a barricade. The result was just immediate chaos. 170. That's how many massive container ships were stuck in a floating traffic jam practically overnight. Billions upon billions of dollars in goods and, more importantly, energy, just sitting there, going absolutely nowhere. And look, this wasn't just media hype. The head of the International Energy Agency himself, Fatih Birol, came out and called it a major, major threat. When the IEA starts using language like that, you know it's serious. And here is where we see the shockwaves spread. You see, a supply crisis this big never just stays in one place. Like a virus, it starts infecting every single part of the global economy. The commodity markets felt it first, and it was brutal. The price of Brent crude oil, up 50%. European gas prices, they more than doubled. And it wasn't just energy. Gold, wheat, everything surged as panic set in. This is what a global shock looks like in real time. Then, the big institutions started crunching the numbers. The IMF came out with a stark warning. If this conflict continues, you can expect global inflation to jump by 2 whole points, while global growth gets cut by 1. That's a nasty, nasty 1-2 punch for the economy. So, what were investors doing? Exactly what you'd expect. A classic flight to safety. Money poured out of anything considered risky, like stocks and emerging market currencies, and flooded into the old standbys, the US dollar, the Swiss franc, and of course, gold. But you know, this stuff isn't just numbers on a screen. This hits the real world hard. Shipping costs went through the roof. About a third of the world's fertilizer trade, which we need to grow our food, was suddenly cut off. And all those central banks that were about to cut interest rates, yeah, they had to slam on the brakes. Now you've got to ask, in a crisis this big, who wins and who loses? Because believe me, there are always winners and losers. And here, the lines are drawn very clearly. The breakdown is pretty straightforward. On one side, you have the winners. Energy exporting countries like Russia and Norway, big oil companies and defense contractors. Their bank accounts are looking great. And the losers? Well, that's pretty much everyone else. Energy importers like Europe and Japan, airlines, and, oh yeah, us, the global consumers. We're the ones paying for it. And when you zoom in on specific countries, you can really see the pain points. Take Japan. It imports 95% of its oil. Or India, which gets half of its imported oil through that now-blocked strait. And here's the kicker. Iran itself, the country that started the blockade, is projected to see its own economy absolutely crater, with GDP falling by over 10%. All right, so that's the mess we're in. The billion-dollar question is, what happens next? Well, the analysis lays out 3 possible paths forward, and it all comes down to one thing: time. So, scenario 1, the best case. The whole thing is over in 6 months, and the world economy treats it like a bad flu. It's a temporary shock, and we recover. But if this drags on for 1 or 2 years, the risk of something much worse grows. And if it goes beyond that, we're staring down the barrel of a deep, painful global recession. And that something much worse I mentioned? It has a name: stagflation. It is, quite simply, an economist's worst nightmare. It's this toxic cocktail where the economy grinds to a halt, but prices just keep going up. It's incredibly difficult to fix. So when you step back and look at this whole chain of events, it all started with a regional conflict. But the shockwaves managed to touch literally every person on the planet. It really leaves you with a final, sobering thought. In a world as interconnected as ours, is any crisis ever really someone else's problem?